what consensus was expecting. The headline CPI rose 0.5%. The this is the first plus 4% print since April of 2023. It's quite impressive. You know, we are in an environment here where we're back in an uptick inside of the CPI. The index for energy rose 3.9% in May after rising 3.8% in April, and then 10.9% in March. The energy index accounted for over 60% of the monthly all items increase. The index for shelter also increased in May, rising 0.3%. The food index increased 0.2% over the month, as food at home index rose 0.1%. This is the first deflationary print for goods prices in a year. So household furnishings fell, transportation commodities, less motor oil fell, medical care commodities fell. What we're looking at here is we're going into our morning time frame. We're looking at 42.9. Let's look at this refreshed here for a moment. And now it is still at 42.9. It hasn't moved a whole lot. This print coming back in line, one could perceive it as being dovish. The only problem is that, PCE and there doesn't seem to be any light at the end of the tunnel at this point for coming out of this rise in energy prices. And so one of the really interesting things that happened in the last 24 hours, and I guess this is, part of our documenting, how markets kind of change consensus, right? I mean, for many, many days leading up into these highs, we were still in long setups. The bullish extension long levels were continuing to hold, despite, I believe we counted eight of the Fed members leading up into the Tuesday timeframe last week where we put in our highs. We're giving forward guidance for rate hikes into the future, or at the very least, no rate cuts. And what we are in today is in a very similar type of situation, actually, to what we were inside of yesterday morning. And it's almost like a template. You can see that we were squeezing up into a 50% short yesterday, and we squeezed up into resistance and then rolled right over. And we're looking at a very similar type of situation here today. We had this support level going into our overnight time frame, and it is literally stick saved its line in the sand. And it's leading us in the direction of the gap fills. But then we stopped just short of getting above that 30 handle. And why is that such an important number? Because when we're thinking about gap fill statistics, outside of the 30 handle, only 32% of our gaps have filled. Now, obviously, that is not zero. But there's a higher probability that we don't fill the gap, the full gap. What is more likely, though, is a half gap fill. 78% of our half gap fills have filled over the last 180 days. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.